Hi everyone, I'm Chad Shoup, and thanks for tuning into my video today. I'm going to be talking about an earnings recession, and it's really not making many headlines right now because the worries over an economic recession are really still in the show. So today I'm going to talk about why you need to focus on an earnings recession and what it means for the coming months and why an economic recession is really not in the cards right now. But before I jump into that, I just want to give you a chance to scroll below and click subscribe so that way you don't miss out on any of my weekly updates. And then you can leave me a comment below too, and I'll be sure to jump in on anything that you leave there so you can talk about it. Recession, earnings, the economy, whatever it is, just leave me a comment and I'll be sure to jump in on that conversation. And lastly, if you're serious about investing, if you want to get started with these shorter term trades and find out how to make big triple-digit gains in just weeks or months' time, then be sure to click the link below. That'll take you to a presentation showing you exactly how we do that, how we pinpoint these short-term gains, and how you look to jump in and out of the markets, making big profits along the way. So if you want to learn more about that, just scroll below. We have a lot of content below this video, so just make sure you check it out. Now, today we're going to be talking about an earnings recession and why it's important in the coming months. So when you look at an earnings recession, what that means is that corporate profits for companies in the S&P 500 are declining for 2 quarters in a row. So they declined in the first quarter, and now as companies are reporting results for the second quarter, which is currently happening, we're actually coming to an end of that, but they're showing negative growth once again. So that's 2 quarters of negative growth. That's how you define a recession. So with these 2 quarters of negative growth and really no headlines about it, what it tells us is that investors are really not concerned about the negative corporate profits. And that's really because of a stat I shared with you a few weeks ago when I wrote about the earnings recession. And that's because an earnings recession without an economic recession is really not a very bad sign at all. In fact, it's happened 4 times since the 80s. And in each time, the stocks continued higher over the next 12 months, as long as we didn't see an economic recession. And right now, there's no sign that an economic recession is imminent because a way to track that ongoing throughout the quarter is with the Atlanta Fed GDP Now. They give you an early estimate on GDP growth. So for an economic recession to happen, we have to see 2 quarters of negative growth in GDP. So that's gross domestic product, and 2 quarters of negative growth. So we haven't even seen 1 quarter yet. And right now we're getting early results for the third quarter, and they're coming in at 2.3% GDP growth. So it's showing that the third quarter is likely not negative either. So then if we're talking in the fourth quarter, maybe negative, then the first quarter could be negative. So then we wouldn't know really until the second quarter of next year, 2020, whether or not we're in an economic recession or not. So we have until then to navigate this market. But in the meantime, I like to track that Atlanta Fed GDP Now forecast, because it gives me an early indication whether or not the GDP growth is going up or down or negative or positive growth. So you can use that. They have an app for that. They have a website. I get a notification whenever they post a new release. So I have it all set up to where I can track this, and I'll let you know if we're heading into a recession when that comes. But right now the coast is clear. We're likely not heading into a recession, at least not until sometime in 2020, likely early 2021. So over the next 12 months or so, I expect stocks to continue higher. And that means right now is a great time to buy the dip in the stock market, to own any dip that we see over the next few months, because it's still going to be a volatile time. But as we continue to add during these dips, will benefit as stocks continue to climb higher. So of course, I have a different way, shorter term way that I like to trade this, and it's based on earnings season, but I don't bet on companies before they announce earnings. I come in after and look to score big, quick gains, even after the fact that they've announced earnings. So that's the way to trade it. And if you want to learn more about that, I have a link below this video that'll tell you all about it, about how I trade earnings and how I've done so with a proven strategy that generates profits over and over again. So if you want to learn more, again, there will be a link below this video to tell you all about it. So be sure to check that out. And if you like my videos that I send, if you like the content that I share with you, be sure to give it a thumbs up to let me know. And you can click the bell to get a notification whenever I release a new video. So thanks for tuning in today. Until next time, I'm Chad Shoup.